Hello, and welcome to the Rev View. I'm Andrew Riddle. Earnings season is winding down, with now over 90% of the S&P 500 having reported. According to FactSet, average earnings growth among S&P 500 constituents in the second quarter was 10.2%. Average sales growth was over 5%. And for those S&P 500 companies that do less than half their business overseas, the numbers were even better. It was truly a remarkable quarter for earnings. We also got a report this week from Disney. Now, Disney's earnings report was sort of what we've gotten used to if you've watched them in the last year. They beat on earnings, they missed on revenue because they continue to struggle with ESPN. What was interesting about Disney's earnings report was the announcement that they're going to abandon Netflix. And they think by 2019 we're going to pay for some sort of Disney streaming service so we can watch Disney's films. I'm not sure how impressed with that idea I am, but the market certainly wasn't impressed, as the stock was down about 4% that day. Netflix's stock has pulled back some based on that announcement as well. Last week gave us a read on inflation, and what we learned is there really isn't any. Producer Price Index was down about 0.1% for July versus estimates that had it up over 0.2%. And the Consumer Price Index was up only 0.1% in July, giving us a year-over-year read of inflation at 1.7%. So why does that matter? It matters because our Federal Reserve keeps telling us that their entire rate hiking policy is built on a 2% level of inflation. In other words, if we don't have 2% inflation, they don't need to hike rates. So will they continue to hike rates based on this data? Well, if they do, it'll be inconsistent with their stated policy. That said, they're politicians and they seem hell-bent on raising rates, so it'll be interesting to see what they do. As for the markets themselves last week, you'd think with excellent earnings and tame inflation, the markets would have rock and rolled. And for the first couple of days of the week, it looked like they were going to. Then these guys got involved. A war of words broke out between Washington and North Korea and sent the stock market spinning on Thursday and Friday. For the week, the Dow closed down a little over 1%. The S&P was down 1.43%, and the Nasdaq closed down over 1.5%. The good news is the rhetoric, at least in Washington, did cool down some over the weekend, and we had a much better day in the markets today, which was Monday. As for economic news this week, we're looking for July housing starts and permits to get a read on how the housing market is going. We'll also be looking at minutes from the Fed's July meeting for clues as to whether they're going to hike rates. So check back with us next week and we'll let you know how all that went. Thanks for watching.